All right, everybody, we're going to go ahead and get started. Welcome to what we call a virtual grand opening. If you're a guest and you're here for the first time, I'd like to welcome you and thank you for taking time out of your busy schedule to jump on this quick Zoom call tonight. A friend of yours, a family member of yours, maybe a business partner of yours has asked you to join this call to just simply show you what they are up to working with me and my firm. And I'm going to leave it pretty brief tonight, but instead of them explaining it to you, they asked you to jump on this call and maybe hope that I could explain this better to you. My name is Jeff Levitan, and I am currently the president of Transformation Financial, and I was born and raised in Chicago, Illinois, and I've been in the financial industry for over 25 years now and running this company for the majority of that time. I'm going to go ahead and get started and tell you a little bit about the company called Transformation Financial. But before I start, I want to ask you a personal question. And you can just answer this for yourself before we get into this to kind of set us up for the discussion we're going to have today. Ask yourself this major question. Are you where you thought you would be financially at this point in your life? When you take a look at your life and you take a look at your income, your savings, where you're at financially, are you where you thought you would be when you were growing up, when you were just getting into your first job, when you were just starting that first career? And if you're not where you thought you would be, or you don't feel comfortable about where you are in preparation for retirement, or you don't feel comfortable at where you are in affording college for your kids, or the amount you're paying in taxes, or how much debt you're currently carrying, well, then you're on the right call tonight, because we're going to address a lot of those things right here and right for you now. So let me go ahead and jump right into the presentation, if you don't mind. Our mission here at the company is simply to help people from all walks of life build a better financial future. And just ask yourself one of these three questions as we start tonight. Do you know someone who could benefit from this message? Secondly, can this information help you, your family, and your friends? And then last but not least, are you intrigued by our business and what we talk about tonight? I want to start off by letting you know we are a subsidiary of a much larger company. Perhaps you recognize the tower in the picture to the right there. That's the Transamerica Tower in San Francisco. We are a wholly owned subsidiary of Transamerica, and Transamerica Financial Advisors is our broker dealer. And then we have a relationship also with WFG and World Financial Group as our back office, our insurance contract provider, and our technology provider. And then all of us are owned by our parent company, Aegon, a Dutch company out of the Netherlands, a multi-billion-dollar multinational company. So look, there's been a major shift in financial responsibility the last 50 years in America. If you go back about 30, 40, 50 years, people used to retire on their personal savings, a company pension, and Social Security. Fast forward to today, most people don't have the amount of personal savings they thought they'd have. If you don't work for the government, you probably don't have a company pension anymore. And then Social Security, well, it's based upon the financial wherewithal of the country in general. And of course, we just added a few $1 trillion of debt this year. And we're going to add probably another few $1 trillion of debt here in 2021. And people are starting to call it social insecurity. And the insecurity comes from where all insecurity comes from. And that's simply just really not knowing how the financial industry works, not knowing how money works, and not feeling comfortable with where you're at financially. If people were to get a financial education, I think they would start with the basics. Most of you on this call have probably heard of the Rule of 72 somewhere before. If you haven't, it's a simple mathematical question, an equation that shows you how long it takes your money to double and represents a law of compound interest. Very simply put, you take the number 72 and you divide it by the interest rate that you're getting on your money. So raise your hand if you have money in the bank. Quick little question. What kind of interest rates are they paying you on your money in the bank? Well, depending on where you bank, it's very different, but most people would say it's 1% or less. Would you agree? A lot of people, it's a fraction of 1%. So you take the number 72 and divide it by 1. It takes 72 years roughly for your money to double at 1%. So if you're 29 years old, and you look here to the left in the dark blue, you're 29 years old and you have $10,000, you put it into that account, it takes 72 years to turn into $20,000. And wouldn't you be elated to have a huge nest egg like $20,000 to retire on 72 years from now? You know as well as I do, due to inflation, it'll probably buy less when you're 101 than it would today. At 4%, it doubles every 18 years. At 6%, it doubles every 12. And at 10%, roughly, it doubles every 7.2 years. So if you're the same 29-year-old and you take the same 10,000 bucks and you put it into something earning 10%, well, roughly at age 65, that'd be about $320,000. So let me ask you, would you rather have $320,000 at 65 or less than $20,000 at age 65? Of course, everyone would say, well, I'd rather have the bigger number. Then the question is, why would you have your money in the bank if you'd rather have the bigger number? Because it's never going to get there in a traditional savings account at a bank. And most people's answer is the same. It's because I don't know where to invest it, or I don't feel comfortable investing it, or I had it invested before and the market crashed and I lost all my money, or no one's ever really taught me how to invest and where to put my money. And that's where we come in. We're going to talk about that a little bit more tonight. By the way, everybody, this works against us with our debt. The compound interest, it works in growing money and growing debt. So if you have $10,000 worth of credit card debt, and you're 29 years old, your credit card debt probably isn't at 10%, is it? It's probably more like 18 to 28%. Do the math for a minute on how fast at 18%, your debt's doubling every 4 years. So if your debt is doubling every 4 years and your savings is doubling very, very slowly, do you understand why you can't get out of the rat race and why it seems so hard to get ahead these days? Most people have their debt at a high interest rate and their savings at a low interest rate. We want to reverse those things. We believe it's worth your time and your effort to fight every day, day in and day out, to get a lower interest rates on what you're paying and a higher interest rate on what you're earning. I also believe that a lot of people don't know how to invest. There's three major systems or way to invest your money these days. One of them is in a fixed type account. A fixed type account is going to grow with a guaranteed interest rate. Unfortunately, right now, a lot of those are tied to the Federal Reserve and different things like that, and they're very low. The guaranteed interest rates out there right now are really lower than ever. They're sitting there at 0, 1, 2, 3%. So if inflation is 3, 4, 5%, which it hasn't been lately, we're in a deflationary period, but it will eventually catch up, like Venezuela and these other places that you see where they print too much money and they put too much money on the street, then we have a big issue. But take a look at this, everybody. You have fixed accounts and then you have variable accounts. Variable accounts is the stock market. People hear about a stock, they invest in it. It seems like right after they invest, it goes down, they panic, they pull their money out. The theme to investing is buy low and sell high, but most people do exactly the opposite because it's too emotional. When they see their money go down, they want to pull it out and keep whatever they have left and make it safe. And I can't blame them because it is very emotional. If you work hard for your money, you want your money working hard for you. The third way and more popular way nowadays is the indexed accounts. If you don't know what they are, that's fine. Get back with whoever invited you, but there's indexed accounts and they follow indexes like the S&P 500 and the Hang Seng and some of these other indexes. But I will tell you what happens with these accounts is usually they have a floor. So when the market goes down, you don't lose your money. And then usually there's a cap or some sort of maximum limit on the upside when the market goes up, but it's more like a staircase. If you take a look here at the index category to the right, it's like a staircase. It doesn't go down, it only goes up, and it goes up more than fixed accounts on a regular basis, and you don't have the risk involved. So indexing is a very popular way for the masses, for the majority. If you're a savvy investor, of course you want to use the market and the power of the market. And if you're absolutely scared, you can do better than a fixed account these days with these indexed accounts. And then there's tax advantages. Let me just show you this really quick. You know, there's a lot of ways to invest in accounts that are either taxable, tax deferred, or tax advantaged / tax free. How is your money growing today? If it's not protected at all, usually After-tax money goes into an account that grows, and then every year you get a 1099 on the growth of that account. So it's after-tax money going in, it grows taxable. And then, of course, whenever you use your money, you're probably going to pay tax when you buy things and spend it. So tax, tax, and tax. Most people have their money in fully taxed accounts. Smarter people learn tax deferral, and they use annuities, IRAs, 401ks, SEPs, all kinds of accounts like that, where you put in your money pre-tax or tax deductible. The benefit there is all of it goes to work right away. And then it starts growing and it looks really good on paper. The problem with that is your money is normally locked up to age 59 and a half. So if you're in your 30s or you're in your 40s, that's a long time before you can get access to and your hands on your money. But worse than that, when you go to finally use it, the money has not been taxed yet, and the government wants their unfair share. And at that point, when you start pulling the money out, it's going to be taxed every single dollar's ordinary income. And based upon all the stimulus money that's been paid out last year and this coming year, do you think taxes in the future are going to be higher or lower, no matter who's in office? These bills have to get paid, and the way our country pays its bills is by printing money and taxing people. That's how they do it. So taxes most likely are going to go up, so you're deferring your taxes to a higher amount later, most likely. Then when you go to pull it out, maybe 40, 50% of that money could actually be assigned to the government in the form of taxes when you go to use it. And then the most savvy of investors, they use the third category, tax advantaged. They use after-tax dollars. They pay their taxes now on a known amount, and then they put their money into things like Roth IRAs or investment-grade insurance. I can't get into that one too much right now tonight, but just know this, it's a lot more flexible, and there's a lot more opportunities with that if you qualify for it. But you put your after-tax money in, it also grows tax deferred, but then when you go to use it, you can have more access to it, and when you do use it, you don't have to pay taxes if you use it properly on the back end. And guess what? A lot of people are going to be retired from 60 to age 90. So the period of time, which is called the distribution phase, which is when you use your nest egg, you're going to have a nice, beautiful tax-free period of time that could last up to 30 years of you pulling out money from your savings without paying tax on it. So what we're trying to do is get people from fixed accounts to indexed. If they're scared of the variable, to indexed, get it growing at a higher rate of return in a more tax advantaged way. Do you see anything wrong with that? Right away here, if you're a guest on here right now watching tonight, ask yourself, is your money growing at the rate you want it to grow? Is there a safety net underneath it in case the market crashes again? Are you getting tax advantages on your money? And is it staircasing on up and getting you the type of returns you want to get? If not, you might want to get back with the person who invited you on tonight's call. Do you know that there's a group of people, 77 million roughly in America, called the baby boomers? The baby boomers, the 77 million people. That's people born between 1946 and 1964. So if you could do the math on this really quick, you know, the youngest of these people are about 57. 57 years of age and older, 70% of the wealth in America is in their hands. 58% of them have never spoke to an investment person, and they're winging it when it comes to their finances. I'm starting to build up a business conversation I want to have with you in just a couple minutes, but hang on to that thought real quick. Supply and demand. The demand is higher than ever for financial advice and help with money, and the supply is smaller than it's ever been at that very same time, which creates a huge opportunity, everybody, because the average person in the financial industry today is 60 years old. And over the next 5 to 10 years, they're all retiring. And it's going to leave a gap of about 250,000 people needed in this industry in the next 5 years. What an opportunity. So what do we actually do here? We do something called a financial needs analysis. If you take a look at these 6 simple steps, we help people in these areas. Number one, we help people increase cash flow. We look at doing a budget, and we look at helping them out of debt, and we look at helping them find additional streams of income. Number two is create an emergency fund. We're supposed to have 3 to 6 months of our income liquid set aside in case an emergency comes up. Do you have your 3 to 6 months liquid set aside in case an emergency comes up? Number three, debt management. We didn't get into debt overnight. We're not getting out overnight. But are you working a legitimate strategy right now to get yourself out of debt? Most people don't know where to turn right now, and they need help getting out of debt. Number four, proper protection. You know, if you went to school like I did, high school, grade school, maybe even a little college, most of them don't teach you how insurance works. It's a big part of your life. Health insurance, life insurance, car insurance, all these insurances, but where was the education in school? Most people just go with whoever their parents went with. They never shop it out. Almost all of them are overpaying and they don't even know what they have. You know when most people get their first lesson on how their insurance works? When they have a claim. And then they find out that's not covered, or that's not covered, or it didn't work how you thought, or the deductible is way higher. That is not the time to get your lesson on insurance. And then whoever talks to you first is usually who you buy from. But there's hundreds of companies out there with very similar products at very different prices. My question to you is, do you have the concrete coverage or do you have the Swiss cheese coverage? Do you have the expensive insurance or do you have the correctly priced, cheaper insurance that has the same coverage? That's what we do in step 4, is help people shop for that. Number 5, building wealth, the nest egg. Do you know how big your nest egg is that you need to retire on? What do you think it is? Do you know most people think it's a lot smaller, that it requires a lot smaller amount than it really does to retire? Think about this. You're going to work 30 years, but you're probably going to be retired 30 years. They say if you're in your 60s right now, you need about an extra $500,000 to pad your retirement so you have golden years instead of rusty years. If you're in your 50s, you need a good $1 million. If you're in your 40s, you need about 2. And if you're in your 30s, you need 3. If you're in your 20s, you probably need $4 million. And I know what some of you are saying. You're saying what I said when I saw this presentation 25 years ago. I don't need to be rich. I just want to be comfortable. Folks, we were not talking about being rich there. That's what it's going to take to be comfortable. So if just because you're doing better than your brother, your sister, your cousin, doesn't mean you're safe. You need a much bigger number than most of you think you do to be able to retire. And then last but not least, number 6, preserving your wealth. Once you know what your number is, know how much you need to be saving a month, where to get to your target goal for retirement, then you got to protect it. You need to have a will and a trust and make sure that, God forbid, something happened to you, your will be done, and that you can help people get their assets where they need it to be, and they're protected from lawsuits. You know, not a day goes by that somebody doesn't pass away and they didn't have anything protected, and they didn't have a will, and they didn't have a trust, and it's caught up in probate court. And a lot of you might know somebody who's been through something like that. So how much do we charge for this? This is the service we provide. You know, there's a lot of companies out there, really good companies, and they'll charge somewhere around $500 to $2,500. The really boutique firms for the wealthy people might charge $5,000 a year maintenance just to give advice in these areas. We realized in our company that if we're really going to help people, we needed to make this affordable. So we brought the price down to free. How does that sound? For free, we'll go out to individuals, families, and companies, and we'll consult with them for a couple hours in all these areas and give them the advice. No games, no tricks, no gimmicks. We'll just give them the advice. We think in that 2-hour period of time, we'll build enough trust that somebody wants to do business with us. And then when we place the business with one of all these companies, I can't list all the companies we have contracts with, but there are hundreds of them, and they're all A and A+ rated companies that are household names that have TV commercials. See, even though we're a wholly owned subsidiary of Transamerica, we're brokers. We're able to find the best product for the customer. And I think that's better than only representing one company. If you work for one of these great companies, that's beautiful. But a lot of times your company, there is no one company that has the best of everything. They're usually strong in one area and not so good in another. So what we do is we go shopping around for our clients, and almost every time we're able to find the client the best that the industry has to offer, and then we provide that for the person, and we're proud of that. Let's talk about compensation. Let's get back to the business. Remember, I told you earlier, folks, that right now in the next 5 years, there's going to be a major shortfall of 250,000 people, agents and representatives, giving advice in the financial space. 250,000. So if you wanted to find the right timing, the right place at the right time to be there, this could be that time for you. And you don't have to be a superstar. Do you know the financial industry is actually the highest paying industry in the world? If you look all over the place, most people don't know that, but a lot of people get into the financial industry for one of two reasons: to get compensated what you're worth. And many of you have jobs now, or you've had them in the past, and you didn't get paid what you're worth. You didn't get recognized for when you did something right, and you want that. And you deserve it, by the way. Sometime in your life, you've got to stand up for getting paid what you're worth. The second reason I think a lot of people would get into the financial industry is they want to do something that helps other people. And the financial industry, you could contribute to someone else's life greatly by helping them out with a financial education and a little bit of financial literacy. So let me show you how this works real quick. If you are a brand new person with our firm, and here's why I'm talking to you about this, we're growing. During last year in COVID, we expanded by 30%. We're expanding in all 50 states, Canada, all the provinces, and Puerto Rico right now. So if you're watching this, you could probably be in one of those 50 states. There's 400 or 500 people on this call right now, all over the United States watching this. We're expanding, and we're looking for new people to work with us, new associates. And if you're brand new and you don't have a lot of financial experience, don't worry, neither did I when I started. I worked on the referral program first, and then I transitioned into a full-time position once I understood what I was doing after 8 months. But listen here, if you're brand new at the lowest paying position called associate and you helped out one client a week. Now, a client is someone who does a financial plan and only gets one thing. And in this case, we're going to use a client saving $200 a month into a IUL product. This is just one of many products we have. We have mutual funds, ETFs. We've got long-term care. We got such a wide array of products and services and active money management. I'm just going to use one for this example. If you're at our lowest paying position, helping out one client a week, start to save and do what they need to do anyway, which is save a couple $100 a month towards retirement into one of these products and protect their family, you'd make $51,000 a year. Is there anybody watching tonight that can use an extra $51,000 a year? Would that change? Would that help? Why do I say extra? Because you don't have to quit your job to do it. When I looked at this thing 25 years ago, I was paycheck to paycheck. I was pretty fresh out of college and had a lot of debt. And the person who interviewed me said, hey, we're one of the few companies of our caliber that let people start part-time on referrals. Feel it out. See if it's a fit. If it's not, no harm, no foul. But if it does work out, you may have the best career of your life. So I started part-time on referrals. I had to get a license. That was the catch. I said, well, what's the catch? They said, you got to pick up a license. Just like a realtor has to pick up a real estate license, you got to pick up a license. The good news is it costs a couple $100 and it takes, you study from home. You study from home online, and a couple $100 later, you got a life and health license and you could start. After helping about 25 to 30 clients, maybe showing a little bit of leadership or management skills, you bump to a senior marketing director. Look at that second line. If you look at that, now for the same one client a week, you make closer to $92,000 a year. That's when most people come full time and start looking at really making this a career. And then management. Raise your hand if you got some management experience in anything, not the financial field. Leadership is leadership. Managing people is managing people. You got to be reliable, dependable, and be able to help people get their job done. If you could do that here and you ran a small little office and there were 5 associates, you're the manager, helping them help their one client a week, you make about $200,000 a year doing that. Managing a small team of about 5 people that all help out one client a week. Now, if you still go out and help your one client a week, you add the 92,000 to the 201, and you're right there close to 300 grand a year. Now, you might have the expense of a little office, but it's pretty inexpensive nowadays to run a small office somewhere. I heard there's a lot of office space available cheap right now all over the United States. And you can work from home for starters. So I know when you look at this, depending on what you do for a living, some of you out there make $15 an hour. Some of you work 50 hours a week for 50 grand a year. Some of you make a low 125, 150,000 a year. Well, that's okay. Some things just pay more than others. And you're not in the financial industry is a spot where you could probably get paid what you're worth finally. How about recognition? Most people never, they get recognition, they get negative recognition. If you ever had a job, they usually catch you doing things wrong and point that out readily. But how about catching you doing something right? How about recognizing your God-given greatness or finding you doing something good and focusing on that? When I came to this company 25 years ago, I couldn't believe the amount of recognition. I got more recognition in my first month than I did at my last job for 2-3 years. Our company, they tell you what you need to do to get promoted. They reward you at every single turn. If you do well, you win trips. We just closed out the Hawaii contest. The company's going to bring 500 couples to Hawaii later this year. Company gives out Super Bowl rings, Rolex watches. I mean, it doesn't, maybe some of you aren't into this stuff, and that's okay. I understand. Some of you love it. It's free anyway, so I love it. I don't mind it. I think for most people, hey, if you're going to get a lot of this cool stuff, it's better than what your last job did. 5-10 years, they give you a coffee mug with your name spelled wrong. And then you do something wrong at work and they're looking to fire you. I just can't believe how some companies get away with treating people like they do. Everybody here, even though you're an independent contractor, you get treated like you're a superstar athlete. And so I love that about this company. And you would too if you understood exactly how it works. So let me wrap up and start winding this down. We are really like a movement. Even though I've got 25 years of experience, and even though I've been in the financial industry a long time, I'll tell you what, we're the new wave of financial services. Banks, banks don't like Bitcoin. Taxis don't like Uber. Hotels don't like Airbnb. Bookstores don't like Amazon. Cinemas don't like Netflix. Traditional 9-to-5 jobs don't like people working from home and remote work. In the traditional financial industry doesn't like us. Why? Because we let you peek behind the curtain. Most financial companies try to scare you into thinking you need them. No matter what, you got to put all your money with them, trust them, and not learn about how it works. They don't take an education-based approach. When I came here, they taught me everything I needed to know about money, insurance, investments, and how it works. And I didn't have time to go back to school again to learn it. I learned it all here in a few months being a new part-time independent contractor with this company. So when I got started, I got the education I wanted and needed without having to go back to school and spend $25,000 to get another degree I probably couldn't use. I got to do it here. Doesn't that just make more sense? The banks, a lot of people think the banks are, I love my bank. I like going in the bank. Really? Do you know what the bank does with your money? You put your money in the bank and do you think it sits there in the vault? No, it doesn't. They lend it back out. They lend it out on home loans at 4%, car loans at 6%, and credit cards at 18 to 28%. And they got to deal with the government. They could lend out phantom money that they don't even have. You think they can only lend up to their deposits? They get to lend up to 10 times what they don't even have out on home mortgages backed by the government, who's really the taxpayers. It's amazing. If you really knew how this stuff worked, it would blow your mind. But I'm telling you this right now, we'll teach you these things. Insurance, man, there's all types of life insurance. Most people don't have life insurance. They have death insurance. It only pays if you die. What if you don't die? What if eventually we all are going to, but most people have the wrong type. They won't even have it. Most term insurance never pays out. It's long gone before you die. Permanent insurance, look, it's supposed to build money in a tax advantaged way and be there at the end. And you're supposed to be able to use the money. If you learn how some of that stuff works, you need to make sure you have the right stuff. Investments. There's ways to stop losing every time the market crashes. I'm just telling you these things because most people don't know them, and everyone deserves to know these things. The more time you spend with us, if you start getting into our training programs, you'll learn all these things working with us part-time, and then there's full-time positions, and eventually you can open up your own offices and be a great entrepreneur. This great country was founded by entrepreneurs. It was built by entrepreneurs, and that'll be most people's saving grace, is the fact that they go back to owning and running their own businesses. So let's wrap up with this slide, everybody. We're looking for 3 types of people. I'm going to stop sharing my screen here so you can see me as we wrap this up. Number 1, we're looking for clients. I started as a client. I loved what they did. I couldn't believe they helped someone like me. Most financial firms, you need to have $250,000 investable before they'll sit with you and give you all the good advice. Well, I didn't have that. I had $100 a month. I was 24 years old, single and broke. They still came to my little junky apartment. They sat down with me, gave me a full plan, helped me get out of debt, and helped me start saving money. I loved it so much. I said, can you talk to my brother about this? And they said, sure. I said, will you talk to my parents? They're blue collar workers. No one's ever taught them about this in their whole life. As a matter of fact, they're divorced. It's going to be 2 separate appointments. You know what they said? Sure, we'll help your parents. Would you like to get paid for those referrals if they become clients? And I said, well, it's my family. I just want to see them helped out. but I'm kind of broke. So how much are we talking? And they said the average referral will pay you about $1,500. You just got to pick up a license. I said, done. So I did that, started referring people in. And then you know what? The money was good enough. After about 7-8 months, I was making more money here part-time than my full-time job. So number one, we're looking for clients. Number two, we're looking for part-time referral associates, twin career. You already have a job. You can't leave it yet. You're not sure if you're a fit for this industry. You could apply. We'll do a background check on you. It's not a join type of business. You're checking us out tonight. We will check you out. Every day or two, we're finding out that people are a fit for this. And we're also finding out that people are not a fit, but at least you can have a shot. So I started out as a part-time referral person for 8 months. Then I shifted and I came full-time. And we have a system to get clients. I didn't have to cold call, which was great. And then business started coming in. And soon after that, I opened up my first office back in 1995. At the end of 95, me and 5 of my friends opened up an office in Oak Brook, Illinois. And we were off to the races. That year, I made $146,000 as a 25-year-old. Everyone told me it wasn't going to work. Thank God I didn't listen to them. The next year, I opened up a couple more offices. I made $262. The year after that, $405. The year after that, over $6. And the year after that, I made a 7-figure income at the age of 29. And I'm here today because we are in expansion mode. Due to Zoom, the fact that we're even together today on the Zoom, during the fact that people can work from home, there's not too many legit work from home businesses. This is one during this era. We're moving faster. We can help more people. You can get trained from home. You could start your business. I have 700 locations, physical locations all over the United States. Once we get out of this COVID, you'll be able to go to a local office and be part of a classroom style training and environment. But in the meantime, you can do it straight from home. Anyway, I'm going to stop there, everybody. I'm going to ask you to get for a couple things as we wrap up. Number one, support the person that asked you to get on this call. You know, somebody thought enough of you to give you a shot and have you take a look at this. Don't steal their dream. Don't take it. If you don't feel like it's for you, just tell them it's not for me. But I'll tell you what, you watch and see what happens. So many people told me when I started that I probably shouldn't do this. I ought to keep my real job. Thank God I didn't listen. Last year, we did 120 million in profit, and we're just warming up. It's going to get a lot better in 2021. And we were up 30% over the year before. So number one, support the person that invited you on. Number two, if you have an interest, either as a client, a part-time referral person, or you're looking for a new career, the next step is to sit down for an interview, make sure it's a fit, get your questions answered, and then do the background check and see if you qualify to work with us. And then last but not least, you know, I would just tell you, if you're an entrepreneur and you want to open up some offices, how would it be to have a business with very low overhead, no inventory, very few employees, very low liability, and very high profit margins with no geographic boundaries? If you can understand what I just said right there, then you're an entrepreneur and you're the type of person that might want to open up several of these offices and make a dream income working with our firm. So look, it's going to come down to you, but get back with whoever invited you right now tonight. When we hang up this call in a minute, get back with whoever invited you on and ask them what your next steps are. They're going to ask you to get on an appointment with somebody who's one of their trainers to just have a discussion and see if it's a fit. And if it is, great. And if it's not, that's okay too. We'd like to help you out if we can with your finances and see what we can do. So God bless all of you. Thank you for being on tonight's Zoom. That's it. That's going to end it for tonight. And hopefully we'll be following up with you in the next day.